Hello. Welcome to our next chapter, that is income from house property, that is your IFHP. So you do not have to get very much into detail. Just learn this format, that is the one in blue. Learn that which is higher, lower, what you have to do when. Only that is enough. They will give you a little bit, little problems on this. That is more than enough to solve this. So income from house property, if you've done this in Inter, you take higher. First is your municipal value and fair rent, whichever is higher, that will be your C. Okay, so higher of A and B will be your C, that is your this amount. Now you will, that all of these figures will be given in the question to you, correct? So municipal value, fair rent and standard rent, these three figures will be given to you. So if any of them is not given, you can ignore. So first is whichever is higher, that will become your C. Then that compared with standard rent, whichever is lower, that will become your E. So your E is lower of C and D. Then you do it, compare it with your actual rent, that is how much actual rent you have received, whichever is higher. So first we did higher, then we did lower, then we again did higher. First we did higher, then we did lower, then again we are doing higher. So that is lower of C and D and higher and actual rent, whichever is higher. Now that is your G. That is your GAV, that is higher of E and F. Then you subtract any taxes paid on let out property in or outside India. You have to keep in mind it is only on let out property. If only if you have let out the property, if it is on rent only, then we will allow you to subtract these taxes. And whether it is in or outside India does not matter. We will allow you to subtract this. Now, since this was your gross, we will come to net. So after subtracting this, we came to net. Then you get a deduction under section 24. How much deduction you get? You get a flat 30% deduction. This deduction you also get 30% of NAV and your interest on loan. If you have taken a loan for this house, this interest will be allowed to be subtracted and you will get your income from house property. So first we did municipal value or fair rent, whichever is higher. Then we compared it with standard rent, whichever is lower. Then we compared it with actual rent, whichever is higher. Then we came to GAV, then we subtracted tax, we got NAV, we subtracted 30% deduction under section 24, then we subtracted interest on loan, we got your IFHP. Okay, if house property is self-occupied, that means you have not let it out, you yourself are staying in this house property. Over here, let out means you have put this property on rent. So if your house property is self-occupied, deduction only on interest of loan, you will only get your interest on loan deduction. Up to two properties can be self-occupied. Only two properties can be self-occupied. Your third property will be deemed to be let out property. Okay, this will be assumed that you have let it out and all calculation will be done and you will have to pay your tax even though you earned nothing. Last is loan for construction. Loan for construction, if you've taken, you will get a 2 lakh deduction. Otherwise, you will get a 30,000 deduction. That means if for any repair renovation you have done, then maximum you will get a 30,000 deduction. But if it is for construction purpose, you will get a 2 lakh deduction, that is allowed. And we are done with this chapter, very small chapter. I will see you in the next one, that is your ICDA, that is income computation and disclosure standards.